Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we're going to be giving you guys an update on Tattooed Chef Stock as they just reported their first quarter earnings yesterday. So we have the documents ready. We listened to a little bit of the earnings report, but we're going to mainly be taking a look at what they publicly released in their 8K document. And yeah, if that's something that interests you, feel free to stick around. Subscribe to the channel if you guys are new, and remember, the number one thing you can do for me is to like the video. So make sure you like that video and all things will be good. So without further ado, let's get right into the video. Alright, so here we are. Tattooed Chef reports first quarter 2021 financial results. We'll scroll down right here. We can see their statement. So it says, our record start to the year demonstrates the strength of our business and the Tattooed Chef brand, says Sam Galletti, President and CEO of Tattooed Chef. Yes, Sam Galletti. That man is going to take us to the promised land, ladies and gentlemen. Branded revenue increased 105% in the first quarter across the mass club and grocery channels, driven by successful product launches, increased distribution, and a promotion at a large club chain. We are executing our own growth strategy to increase distribution, build brand awareness, and expand manufacturing capabilities, and diversify our product portfolio through innovation. We are investing in the business today in order to support long-term growth, and we believe the recently announced strategic acquisition of Foods of New Mexico will create meaningful shareholder value going forward. So guys, this is really cool. I like that Sam Galletti spoke about these types of things, and it basically gives an idea of what the company's goals are. So currently they are in a few different food chains such as Costco, such as Target, such as Sam's Club, etc. But they are looking to expand that as well as expand their product lines within these stores. They recently announced that they will be having some new products inside of Target as well, so they'll have some more shelf space. And they're going to be getting into new grocery stores as well. So the growth strategy is still in place. They have not nearly gotten to the full capacity that they can be. And with their new strategic acquisition of Foods of New Mexico, they will have no problem expanding their product lines and getting the growth that we are expecting. Like I've said before, plant-based food is not just a trend, it is the future. People want to be healthy. People only get one life, so you might as well be as healthy as possible. So plant-based foods are not going anywhere. It's going to completely disrupt the food industry, and Tattooed Chef is on the forefront of that. So Sarah Galletti, Chief Creative Officer and the Tattooed Chef. So she is the Tattooed Chef. We are revolutionizing plant-based eating with the Tattooed Chef brand by tapping into consumer preferences and constantly bringing new ideas into the market. Our recent product launches in retail have been very successful with the addition of new manufacturing capabilities with the Foods of New Mexico acquisition. We have a pipeline of over 250 plant-based innovation ideas, including ambient products and snacks. If you guys have not yet already, check out that first link in the description. It'll give you up to $50 in free stocks just for signing up. So you just sign up, link your bank account, and that's that. You will get up to $50 in free stocks. My free stock was $42 and I put it right into Tesla, so I got lucky with it. You can get lucky too, so you might as well try it and sign up. They're also going to be doing a town hall with the CEO of Bumble on the app, because the app is a social media marketing website. So if you want to ask the CEO of Bumble a question, sign up for public and you can ask her. It's literally a social media, so you can reply to her post and she will see it and she will be answering that on Monday. So definitely check that out. Alright, so taking a look at their income statement that they just released, is comparing it to the first 3 months of 2020. So we're comparing it to March of 2020 and March of 2021. As you can see right here, they increased their revenue to $52,000, which is a lot of growth from 2020. Which I think is very impressive for the brand, because they are growing very, very fast. Now, this was pretty expected, and we're going to have to take a look at some of the estimates for next quarter, because I think the analysts are under predicting this one, because there's a lot more to be seen in the next quarter than this quarter, and their revenue estimate is about the same as this. So I think the revenue estimates are a bit off for this stock, and I think this stock is very undervalued. And we got to look at this as well. So as you can see, the operating expenses have gone up dramatically from the first quarter of last year to the first quarter of this year, but this is also why they will be growing so much, and a lot of this has to do with their strategic acquisition of the Foods of New Mexico. So with that, the revenue will be expanding much more than analysts have predicted because they have more capacity for manufacturing, they have new product lines all around, they just have more operations, so they will definitely be able to improve their revenue. And something important to note right here is the loss of shareholders' equity of 7,764. As you can see, in the previous year, they were up 4,536. And by the way, this is all in millions. So it's actually 4 million and 7 million respectively. And what this basically means is that the acquisition has put them in a strap for cash and they are now losing money as a company. And that is kind of to be expected with a company that is seeing a lot of growth. However, we did like this stock because it had a great price to earnings ratio. So with that being said, the price to earnings ratio will only be increasing in the future because they won't have these one-time expenses that are acquisitions in the future. Obviously, the expenses that come with the acquisition, like higher operating costs, you have to pay employees, etc., those will be increasing. However, they're not going to be the one-time cost of acquiring this company ever again. So that is really, really good. And a growing company can operate at a loss. It is to be expected, and this will just improve their price to earnings in the future, so I'm not even that mad. Alright, so what we have right here are the analyst estimates for the next quarter, which is actually less revenue than we saw in this quarter. So they have estimated that there will be less revenue in next quarter than there is in this quarter, which I think is absolutely ridiculous. They are going to shatter this expectation right here. They're increasing their product lines. They're getting higher production capacity. They'll be able to ship out more products to these stores that are selling out. They will be able to do more and more and more this quarter. So there's no way they're going to have less revenue next quarter than this quarter. So if these numbers are what the stock price is pricing in right now, Tattooed Chef is definitely undervalued. And yeah, as you can see, the high estimate is also 52 million. And guys, this is just ridiculous. Like, I don't agree with this at all. They are going to completely demolish these expectations. Alright, now taking a look at their balance sheet, I'm even more impressed because, like I said, they had a net loss, and this is not normal for them. They usually don't run at a deficit. However, if you look at their cash position from 2020 to 2021, it's increased 85 to 131. So they're not stressing financially at all. Their assets are increasing by a lot. Liabilities are not increasing nearly as much as their assets, and as you can see, total shareholders equity has gone up as well. So this company is definitely in a very healthy financial position. And I just want to point it out again. So they did go to a loss this quarter, but they had a 7 million loss. So their loss was only $7 million compared to their $185 million in cash. So I would not be worrying about this if I were you. I would be happy that they are using this cash appropriately and investing in the company. They also recently announced that they will have new multi-serve meals available at Target. So this was just a few days ago. So guys, they are going to absolutely shatter their revenue estimates of 52 million next quarter. It's not even going to be close. They're going to be up over 60 million in revenue next quarter, and I'm very confident of that. Tattooed Chef is in a great position financially still. They are going to be doing great things. The one-time expense of that acquisition is going to be going down, so this is not a recurring expense. Yes, there are going to be increased operating expenses from it, but with that, there will be increased revenue. And as you can see, more products are being sold at Target, more products are going to be sold elsewhere. Other grocery stores are going to want to have Tattooed Chef because it is pretty apparent that their products are doing absolutely phenomenal. That being said, guys, you guys know exactly how I feel about Tattooed Chef. I absolutely love this stock. I think they're underestimating this thing like crazy. There's no way that revenue is going to be the exact same next quarter as it was this quarter. Like, it's just not going to happen. I'm super excited about this stock. You guys already know how excited I am about this stock. If you'd like me to explain anything else in this video, make sure you leave a comment down below. I'll reply to any question you have. I know it's kind of hard to follow these numbers, especially if you don't have a background in finance, so I understand that. So leave a comment, I'll reply, and yeah, that's how it is. Tattooed Chef is going to be doing great things, guys. I'm so excited for their future. They're going to shatter these estimates. Don't even look at those estimates. Those estimates are wrong. And we are going to be doing well. Short term, I think this stock can get back to $25 a share pretty easily, especially if the bull market comes back in growth stocks. There's no doubt in my mind that this thing will get back to $25 a share and beyond that, because it is going to be continuing to growing. Plant-based foods are the future. They're not going away. They're going to disrupt their other competitors. And yeah, that's that. I hope you guys enjoyed the video for you guys today. I enjoyed making this one as always. Make sure to leave a like on the video if you guys enjoyed, and subscribe to the channel if you want to see videos like this every single day. We post videos almost every single day. And yeah, that's all I got for you guys. Peace.